Well, good morning, everyone, and welcome to Good Morning Cannabis. I have one of my new friends who's really, really smart, Dionne Kellier. Did I say it right?
You did say it right. Thank you very much.
Awesome. So now what you're going to hear is something that is near and dear to us accountants, is this whole topic of taxation in the cannabis operations, companies, and that word that accountants use and tax attorneys use, 280E. And Dion is going to tell us a little bit about first herself, and then a little bit about the company that she is a partner in, and then also cover some of on the highlights of the common mistakes that people have in understanding the application of 280E. So, Dion, thank you for coming to the show, and tell the audience a little bit about yourself. How did you get into the cannabis space and your company, and then go right into the answer, to that question: is 280E really as bad as people think it is?
Okay. All right. So hello, everyone. My name is Dionne Kellier. I am based out of Fort Lauderdale, Florida. I am a partner in Smart Counsel. It is a 100% woman-owned, half minority-owned firm, and it's 100% virtual. Our partners are in Colorado, Maryland, and Pennsylvania and Florida. I am a tax attorney. I have my LLM in tax, which I received from Villanova. I'm able to do tax planning, tax resolution for businesses and individuals, and I also do tax planning for marijuana businesses, and so that's how I got into this space. All of my business partners, we all were at another firm that was out of Colorado. That's how we got together, and we all had our areas of specialty, and so we just decided that it's probably better that we step out on our own. And so we do a multitude of things. I am the tax person, of course. I love all things tax. We do mergers and acquisitions. We do environmental, regulatory, banking, and anything on the corporate side, anything up until you go public. That is what we do in our firm. And so let's see. I am, based out of Florida. I've been a lawyer since 2006, and now we'll get into 280E. So is it as bad as people say? Yes, it is as bad as people say.
I applaud you for telling the truth.
Yes.
And is there any way to get out of 280E?
If you are a plant touching entity, no, there's no way to avoid it. Period. I know that people have different ways of trying to avoid 280E, but if you are a plant touching entity, meaning that you are in the business of utilizing THC or utilizing anything that's not industrial hemp, which is anything that's above 0.3% THC, then you will be affected by this code. How deeply you are affected depends on what area in the industry that you're in. So you're either a retailer or a store, or you are a producer / manufacturer. So we can separate them into those two buckets to make your life a little bit easier. So what is IRS code 280E? I will read it for you so that I am not going to paraphrase in my own way.
Oh, good.
IRS code 280E says, no deduction or credit shall be allowed for any amount paid or incurred during the taxable year in carrying on a trade or business if such trade or business or the activities which comprise such trade or business consist of trafficking in controlled substances within the meaning of Schedule 1 and Schedule 2 of the Controlled Substances Act, which is prohibited by federal law or the law of any state in which such trade or business is conducted. The reason why it's important is because marijuana is a Schedule 1 drug, and until it is descheduled, it will be 280E will apply. So marijuana is just like cocaine, is just like meth, is just like heroin, as far as the IRS sees it being a controlled substance. And why can the IRS tax it? Because the IRS taxes income, and the IRS does not care how you receive your income. So if your income is from illegal activities or legal activities, the IRS is like, we don't care, just where's your tax payment for it?
Show me the money. Show me the money, right? Yes.
Exactly. So that's 280E in a nutshell. Like, the IRS does not care where the money comes from. They just want their cut. The only other thing I'll say before I zip it a little bit is that that IRS code 280E comes from a case. It's Edmondson versus Commissioner, and the case was in 1981. And what happened is that in 1979 or in the late 1970s, 78, 79, there was a man named Edmondson is his last name. He was a dealer, so he sold cocaine, he sold any type of Schedule I, any drug that is imaginable, he sold it. Well, his supplier had gotten arrested, or he got arrested, but I think he got arrested, which led to his IRS contact. So when the person that was supplying to Edmondson, when the IRS got in touch with him, he basically told who all his customers were. So Edmondson was one of the customers. Well, Edmondson was a pretty crafty customer, and he challenged the IRS, and he was able to get the cost of goods, which is going to be his scales, his baggies, even his part of his home office that he, did all his bagging and drug stuff. He was able to get all these things deducted from the notice of deficiency that the IRS sent him. And so the next year, the IRS was like, whoa, new rules, you cannot do that. So he used the IRS rules against them. And then so the IRS changed the rules. And in 1982, IRS code 280E was born. And basically you can only deduct the cost of goods sold for any product that is considered trafficking in a Schedule I or Schedule II drug.
So what happens if a cannabis company opens up a separate entity, this whole idea of having a management company, and shifts all the expenses to the management company so they can deduct it on the management company and it's not deductible on the cannabis company? Is that a loophole that used to exist or never existed? Like I hear people still talking about that. So tell me what you think of that.
So it is a loophole that is present. It is a perceived loophole that is present, because the IRS is hip to every single thing that you try to pull in order to avoid 280E. So a management company or any other company that is not a viable company without the marijuana, it will not be a separate entity. So if the company cannot exist but for the marijuana entity, the IRS will collapse all of the businesses into a 280E plant touching affected business, and you will only be able to deduct the cost of goods sold. So, everybody has bright ideas, right? And this is just one of those things that, yes, it sounds good. Yes, you can have a separate management company if that separate management company can survive without the plant touching company. If it can, it's a viable business. Typically, can it? It cannot, because they're just trying to diversify their businesses in order to make deductions on another side. And for anybody that's in the marijuana industry, it is not if you're going to get audited, it's when are you going to get audited. So you just, certain things and activities that you do, move yourself up in line.
Awesome. I'm glad that you agree with me on that point, because that's the way I've been advising people. So when you're advising your cannabis clients on how to set up their business, what do you typically tell them to do?
So I typically find out, what is it that you do? Tell me everything that you do, so then now I can place them in buckets. And when I then place them in buckets, then first the plant touching, there's nothing that we can do about it, right? So we try to make the plant touching entity have the least amount of expenses as possible. Because it depends. If it's a dispensary versus a grow, they're different because their cost of goods are different. So if it's a dispensary, the dispensary itself has the least amount of expenses possible, because you're not going to be able to deduct anything other than what you paid for and the transportation to get it to you. That's it. So everybody else that's able to deduct the employee salaries or the rent or anything that a normal business will deduct, your dispensary is not going to be able to do that. So you want your dispensary running like very skinny, like if you can only spend $100 in expenses for your dispensary, that is what I suggest. And then, we try to also, your employees may need to have several jobs, because on the dispensary side, they really should not get paid more than minimum wage, because you have no benefit to paying them more than minimum wage. But no, minimum wage is not necessarily a survive. You cannot survive on that. So they need to supplement their income. So to put them in other positions in other areas that would allow for deductible expenses. So like say that you are a dispensary and you have a grow, like you have a nursery. I would definitely put one employee that works in the dispensary, I would also have them in the nursery and maybe in a supervisory capacity, because what the cost of goods in my mind is that anything it takes to get to the end point. And so for a nursery or a manufacturing situation, you do need a supervisor to get you to the end point to get the final product. Whereas in a dispensary, I mean, your end point is once the product touches your door.
Right. What do you think the future holds for the cannabis industry in 280E?
So I hear people, I am not very hopeful that it's going to go anywhere, because how does the IRS replace the income that it receives from taxing people in the way that they do for 280E? When 280E is applied, you can be taxed upwards of 70% up to like 105%. So how does the IRS replace that income? When somebody can show me how the IRS can replace that income, then I may have a brighter outlook for 280E being removed or there being some exception for marijuana companies. But I don't see it happening. How do you replace taxing somebody 70%?
I love it. I mean, it's true. I mean, I don't love it, but it's pretty much true to the core. So this is great. Thank you for this content. If people want to get in touch with you, what's the best way to get in touch with you? What's the websites, the email addresses?
So my name is Dionne Kellier. My email address is Dionne, DIONNE @smart-counsel.com. Our website is smartcounsel.com. Our phone number is 1-800-831-8068. The office cell is 561-860-4680. For me, email and text is the best because I will get back to it. Like I get pulled in several directions. So when I see it in writing, I can always return to it. And you know, I do consultations, but all of them, I can't tell you if I'm not going to say we do free consultations, because some of them are free and some of them are not, right? And the reason why is because it's me gauging the situation. If you're just contacting me for like information, like a 1-hour call and that's it, we'll never hear from each other again, then yeah, you're going to pay for that consultation. But if we're opening the door to our relationship and we're going to, you know, have several more conversations and we're going to engage, then the consultation is free, or the money will be applied towards whatever your retainer is. We are, you know, fully virtual. We do our meetings, Zoom, Google Meets. I do in-person meetings, but you know, since the COVID situation, I'm very skeptical about, I don't want anybody coughing in my face. So,
no coughing in your face. That's good.
Yeah.
Well, thank you so much, Dionne, and we will have you back again as things develop. But for now, you got all of Dionne's contact information. I would highly recommend her as someone that you should speak to. Obviously, we are CPAs, but there's an element of the law that very often you need to consult when it comes to 280E. So thank you for being my guest, and I'm wishing you a great day and a great life.
Thank you so much. Thank you for having me. I really appreciate it.
We'll talk again.
Okay,
Take care.